Ready for another mythbuster about China? Well, here you go. One of the big news headlines out there today is that foreign investment in China tumbles, and that basically there's nobody who still wants to invest in China. And it's true, if you're looking at some of the metrics out there, economic numbers like net foreign direct investment in China, it is indeed going down and low. And this has sparked headlines from the big names like Cathie Wood. She's out there and saying like, well, China is going down, and she's very pessimistic about the prospects of China, writing all of these narratives around sharp slowdown in the economy and also the real estate markets, things like that, which I'm covering here in my latest videos. But by the way, this is just another reminder that you still have to subscribe to this channel if you're new, because this is where I cover China news and I try to show also the other side, and that should be valuable for investors in stocks like Alibaba, Baidu, which we had earnings today, NIO, and so on. But generally, I think we cannot say that foreign investors are simply not going to invest in China anymore. First of all, it's always been kind of cyclical, and well, we might be at a downturn in the cyclical phase here. And of course, due to the very rigid COVID restrictions, there simply wasn't the availability to invest in China. And yes, we have the decoupling, de-risking, whatever you name it, and some factories will be built by Chinese entrepreneurs in Vietnam, in Mexico, and so on, and still be owned Chinese, but it may not show up in the foreign direct investment of China anymore. But now I want to make the switch to the stock market. And of course, this is a little bit different type of investing. That's not about building factories and so on. However, about the narrative out there that nobody is going to invest in Chinese equities anymore. And I think that's also not the case, although we may have some subdued demand right now and lots of fear around it. However, I covered before already that this fund manager by Amundi is going out and saying he's going to shift investments from the US to China. And his reasons are that he thinks that the US market is kind of a little bit overvalued and the future growth will be actually happening in China. And this fund manager, or the chief investment officer, is called Vincent. He's a French guy, and he has 2.1 trillion euros assets under management. So that compares to around 14 billion of investment, for example, of a fund manager like Cathie Wood of ARK Invest. And so you can see this is a whole new category of investor here. That doesn't mean that this guy is going to shift all of those assets to China. Of course, that's not the case. And not all of this is going into our KWeb, Alibaba, NIO stocks, and so on. However, I just want to make the point that there is interest of investing in China, and that's not what the headlines are saying. In fact, I've covered over time how Vincent, so this is the asset manager here, was going to China, and he's posting about this on LinkedIn. And the first time he went after the opening was in May this year. And I agree with him, like there's nothing better than on-site fact-checking. So it seems to me that he's also kind of sniffing out there that the narrative out there doesn't really match with what's going on the ground. Later on, also his team went on the ground. So this was also uncovered by me on Twitter. They have actually met with some of the regulators out there, and they have inquired about stuff like data protection and, possibly lots of this stuff that was named in the big tech crackdown around the big tech names and how they are regulated. So they go there and meet the regulators firsthand, which I think is a brilliant move and exactly what needs to be done in order to do due diligence on the ground and get an understanding of how China works in order to possibly invest there. Now, today I shared the news that Vincent already posted on his LinkedIn again, that he's back in beautiful Beijing, lucky with the weather. By the way, there's lots of blue sky days these days. And he's happy to spend 3 days here meeting with regulators as well, the staff, our partners and clients. And he's getting a feeling on the ground that the situation is well under control here, and some short-term pain to secure the long-term gains. So this is how an investor thinks for the long term, especially if you have that many assets under management and you are looking to participate in large, big, long-term shifts of growth. By the way, Vincent, he's also going out here in some of these conferences and look at his slides. growth shift from west to the east. This is how he's, going out there. And I think it's not easy to go out there and be open about this. And he's certainly getting quite a bit of a backslash. But what I just want to show here is that there are certain big investors, this is big money out there, who's still interested not only to build new factories in China, but also to participate in the growth of this country and investing in it for it. So this is against the narrative out there. I think this has hopefully debunked some of the myths and some of the headlines that you see out there. Of course, the truth is possibly somewhere in the middle. Yes, China is currently switching its growth model, as I've outlined in a previous video. Yes, China might face a couple of problems and issues like the youth unemployment, like the real estate sector, which they have to tackle, but it's nowhere like it's portrayed in this kind of a doomsday narrative out there currently. And so I just want to show both sides, and I hope you appreciate that. If so, please smash a like, share this video, and then hopefully you're also gonna watch my next video. Thanks for watching. See you.